Automotive World. Thanks a lot for joining me on this Monday afternoon market recap. I hope you are doing well. The markets themselves today, they have been relatively sleepy, you could say, collectively across the board. We did see a little bit of a pullback. However, as at the close, we are still yet to really penetrate this gap and to definitively close this open window. For those privy to the discussion that we had, not only on the most recent Saturday in that Pivot Point Pro analysis class, also this Saturday before that, you should be well aware, obviously, as to what to expect moving forward. Once we get down to this gap fill, right, we should see these markets actually stabilize. See those reversal candlesticks, very similar to what we saw during the Tuesday-Wednesday transition of last week when we went back to fill the gap on Thursday and Friday between that of the 3rd and also the 4th of October over here. That essentially, long story short, is what we are looking at these markets to do. Whether or not it takes place during that or at least through the formation of a bull flag, that would be relatively interesting. Or whether or not we actually just get stuck moving sideways and out of a very short-term stair-step consolidation. I just wanted to point out to you that the oscillators themselves are once again supporting that of this bullish move that we have seen begin to take place over the past 1.5 weeks. And this is continuing once again to set off from the foundation that we built during the month of August. So you can see over here, this is the chart of the S&P 500. You can see in August we bottomed out just shy or just below 2,850. It was coming in at roughly 2,836. Most recently, for the first 2 sessions or the first 3 sessions in the month of October just here, you can see that sell-off is obviously now creating that of a higher low. So again, we're seeing the basing off from what is now that higher low, the secondary re-continuation of this macro primary bullish trend. We spoke about this on Friday. If I can bring up my template here, we've got the shooting star candlestick to end the week. We were saying how the majority, right, of this move, whereby we've seen the breakout and now the pullback, which is really factored into the price action, i.e. the upper wick on Friday, was looking to play out really for the first half of this current week. Today, again, a little bit of a doji candlestick here on the S&P 500, down 4 points, but again, nothing miraculous really as at the end of today's session. The Dow Jones, very similar. It's sort of an inside day spinning top candlestick, down 29 points. And on the NASDAQ itself, we closed down 8.4 points. So again, we're pushing into the gap. At least some of these markets have penetrated, but at the same time, we still have quite a distance to go. Now, instead of harping on about this, all right, or at least the market activity at the moment, I think hopefully at least you are well aware and well versed in that. Rather speak about some of our top 12 individual trades that we've been accumulating and placing over the past number of weeks. I'll start at Apple and I'll work my way down the chart, okay? Apple today, it closed down 34 cents. However, we've had bullish triggers on this, right, to enter into call contracts at 223.12 and also 230.59 more recently. Okay, we've got a bullish continuation signal up here, 239.08. But again, at the same time, we're looking for Apple to come back down into this green box to set up that basing support and then to continue higher. So again, no matter which sort of entry point you've entered into Apple, it is a pretty decent trade as at this point. And the good news is that it's got plenty of ways to go. It is sitting at a new all-time high. If I go back and sort of juxtapose this against where we were to begin that of the calendar year of 2019, we were all the way down here, roughly $140 per share. So again, when you're talking about market leaders, all right, you can certainly say that Apple continues to lead. Here we are today, all right. It's just a ways, of course, from the Friday all-time high closing price. But in and of itself, I mean, you're still above the exponential moving averages, the simple moving averages, and the oscillators are firming up quite well. We've also got the ADX and the CCI indicating that this is most likely a trend breakout. And as such, we can just hold these positions indefinitely into the future, at least close them out prior to earnings, keep a portion of them open, and then continue to hold as this trend really gets moving. Amazon still yet to really definitively flinch above 1748 or even 1753. I think that secondary entry is, which it is. You can see that we're getting very close to it. It's boiling. This is what we call a exhaustion, right? A false break to the downside. We should see this stock begin to rally. My target is again 1,972 on that particular stock. Boeing Airlines treading water, very similar to what I just spoke about in the market indices. Whether or not it's a stair-step consolidation, I believe it is. It looks to be anyway. You can certainly see that we're holding above that of past resistance. You can see this critical sort of line in the sand. Let me just zoom out and show you this so you can see it for yourself. But if I can get enough sort of time on my frame, if you go back and have a look at this pivot point just here at 373, you can see that we're barely holding above it at 374.90. But again, it has acted as resistance on a number of occasions in the past. We've broken above it in the month of September, and now we're retesting it from the top in the month of October. Once the markets do close their gaps and begin to see a reaction, Boeing Airlines is poised for a dramatic move higher. So mark my words, there's a warning for you if anyone's in their shorts. Hopefully not. Hopefully you're on the long side of that trade as well. But that's a very nice setup, which is continuing to brew away. We've got Baidu again, largely just moving sideways. No major recap here for the chart of Baidu. Have a look at Caterpillar. Caterpillar again taking off. This is Friday's candlestick last week. It still hasn't actually pulled through today's session, but I can still recap it anyway. 121.40 was that original, entry going back to last week. All right, and as such, we're up here at 128. This is off at the moment. It's still pulling through the end of day data on my chart. You can see it's distributing 86%. I'll be surprised if it actually pushes through new data. If I close that, we're still looking at Friday's candlestick, but a big gap up on Caterpillar. So again, another pretty decent trade there. Very quick trade over the past, well, 2 sessions if you factor in Thursday, Friday. But you'll make your own sense, obviously, of what has occurred today. Green rectangular box, you know what that means moving forward. As such, you could probably close out a portion of those trades at the moment. You've got COP again, still taking off to the upside. A lot of these charts still, or at least not COP anyway, are still factoring in Friday's close. My apologies for that, but you can see that they are definitively making that turn and pushing off from those areas of support that we've been speaking about for a number of months. You can categorize, by the way, Disney. This is a pretty decent segue. DIS, back into the chart setup of Amazon. Okay, very similar type of chart setup. We've got the false break to the downside, the exhaustion move in terms of momentum. This is looking to turn. It hasn't definitively turned yet, but pay attention to it over the coming weeks. We should see this rocketing back up towards 142 in due course. Okay, major warning there. On Disney, we've got Google again trying to make that turn. It's still making a series of higher lows as well. Even recently, again, like the markets back in the month of August itself. See that hammer candlestick at support just here. And since then, we're trying to sneakily, stealthily, move to the upside, which it continues to do. Even with this little pullback today, you can see here we actually closed up $2, but we tried to push down into recession. You can see again, we're trying to at least push on up into higher prices, which is fantastic as well. We spoke about this over the weekend, giving IBM enough leeway. We were talking about risk and reward on this trade. We got the original gap up. This is what we call a gravestone doji at the resistance area. That's why we poised the trigger with a little bit of fluff above that at 144.85 to mitigate instances like this. You can see this is going back to Friday last week. Again, similar to that previous chart, it hasn't updated yet on IBM. Be interested to see actually what this has done. I haven't actually seen any new trade triggering through my side, so I assume anyway at this particular point it hasn't actually done much during today's session. Watch for that gap to close again. Very similar to what we've spoken about again over the weekend. Microsoft up here. This is Monday's candlestick, down 14 cents. Another doji type candlestick. It is a little bit of a shooting star candle, but again, we're looking at Microsoft, unfortunately. And again, we spoke about this over Saturday, more or less getting stuck here as the markets come back down to close their windows. But once the markets do that and they move through that final hoop that was created towards the back end of last week, there's really exciting times ahead for a lot of these stocks. Some of the stocks, obviously, as you can see on my screen, they have broken out. They are trading at new all-time highs, and they are essentially trending at this particular time prior to the markets moving in that formation. Microsoft is not one of those stocks. However, it will be sort of swept up in the tide of the market when it chooses to move higher. Definitively, before we can do that, we need to see those gaps close. And the final stock, again here, is Netflix. Netflix is toying around that 284.30 breakout entry. You can see there on my chart. All right. And as such, again, we've been speaking about this, that there's a lot of stocks that have been in these sort of little pseudo bearish moves, these intermediate corrections, okay? But as at the end of September, this is really critical for you to understand, and I'll sort of close this Monday afternoon market recap on this note, right? What has been a relatively sort of bearish period for a bunch of stocks, and also in the markets generally as they have been moving sideways, it seems to have definitively exhausted itself, well, when it comes to Netflix anyway, very late in the month of September. This candlestick here is what we call a one white soldier, right? This is after, again, the false break. It was looking like we were sort of staring over the abyss, right? A big cliff to the downside, but as such, it's stabilized and it's starting to move back above, right? That bullish trigger at 284.30. There's still this predominant, all right, very pertinent gap up here, just shy of 361.26. So if you look at this through the eyes of the guys of risk and reward, it's a fantastic trade just there. It's obviously going to take a little bit of time, much like the markets. The markets have surely, all right, or have certainly been taking their time when it comes to stabilization and actually really sort of moving back into that trending state that we've been calling for a period, or quite a period anyway. But things are still firming up. They're looking good. They're looking resilient. The markets are hanging in there. And again, with all of the opportunity that the markets have had to actually sell these, or at least breaking below that of August, or even the sort of the June swing low over here, the markets are still yet to achieve that. So as it stands, and with those oscillators turning up, different fractals looking positive, right, you could even draw sort of pseudo trend lines through here if you really wanted to be really aggressive in the minor, also the pseudo sort of intermediate level of the trend. There's nothing to be concerned about, even as at the close of Monday. Not yet. There will be a time when things do become a little bit dicey, legitimately dicey when you're talking about macro reversals. But as it stands right now, things are still looking a-okay. It's just taking a little bit of time for these markets again to push through and close a series of gaps that have been continuously opening over the past number of months, which is really just the byproduct, right, of all of this volatility. I'm hoping and hopeful that this volatility is going to be removed from the markets to the degree in which we're seeing it at the moment. Of course, it's going to linger, but just not at elevated levels that it has been, which is going to result in less gaps, which then means that the markets are not going to have to give back, right? Originally, some of those gains that were made between that bullish opening gap, right? Say between the two individual sort of daily candlesticks. So we're in that process, we're in that midst at the moment. It might be a little bit of a slow week. For past couple of months, it's been relatively slow as well, but we're moving towards the resolution to all of this, which is why we're following this so closely and again, continuing to accumulate market positions, all right, in anticipation and front running the ultimate breakout. All right, so I hope that makes sense. If you have any questions, anybody, email me, success@pivotpoint-trading.com. A bunch of great trade entries that I've just gone through with you in that pro analysis class, sort of stemming over the past number of weeks, but they are starting to build traction and they are starting to move, all right? And you will be paid off, right, as this market moves to this final gap close and then continues on its way higher. All right, so on that note, I'm going to end it as at this Monday end of session recap. Enjoy your evening, everybody. I'll be back with you, hopefully once this gap closes, and we can talk about the upside potential of this market. All the best. It's James signing off on behalf of Pivot Point Trading.